Good morning, viewers, and welcome to the channel. My name is Shannon Rifkin. This week's video will be on Tesla, and subject here is what does the chaos at Twitter mean for Tesla? I should have said the date is the 23rd of November. So a little chart here, of course, just showing, and I think the date here is just the beginning of this, beginning of 2021, showing, of course, the effective zero cash rate environment that led to the stock trading above $400 at all-time highs. On both valuation perspective, obviously that environment was perfect with low interest rates, obviously resulting in much higher discounted cash flow valuations, and of course a very strong economic environment driving strong demand for electric vehicles. Then, of course, as the end of 2021 has come, we start to see interest rates bottom and start to move up quite aggressively, which is, but at least for the first part of the year, Tesla was a clear outperformer, based on the fact that demand for electric vehicles kind of has continued to surprise to the upside, and I think most analysts continue to kind of upgrade their expectations for the next decade and beyond. And then of course we've come to this point where Elon Musk has, for reasons unknown, announced his intention to buy Twitter for $44 billion, which has led to this nasty kind of move down. Then of course throughout this period, where he's tried to move away from the acquisition of Twitter before being forced to close that deal, as he effectively had signed a binding contract, and the courts. Well, I think ultimately he moved ahead and closed it himself, but knowing that the courts were going to do it, and this is at this point. And now, of course, we've had this really crazy, tumultuous period over the last 3 weeks or so, where he has seemingly walked away from Tesla, and at least in his day-to-day responsibilities. And if you follow his Twitter account and you follow things closely, it seems like all he does is spend his day on Twitter, fighting with people, or sacking staff, or changing policies only to reverse those changes shortly after. It's been pretty crazy. Now, the question is, of course, what does this mean for Tesla? Well, there are a few things. Tesla, as a company trading at a very high multiple, both on an earnings basis and a revenue basis, it has earned that premium rating, of course, by being a company that has continued to exceed expectations. But to maintain that sort of rating, question marks are the last thing you need. And now there are, of course, a few question marks. Number one, Elon Musk is, the visionary that's selling the Tesla story. He has, this kind of aura of invincibility, and is that now being undone, both by the fact that, question is how much work is he actually doing at Tesla at the moment, but also is he about to burn the quickest $44 billion you've ever seen in corporate history, because he's already talking about how Twitter might go bankrupt if things don't improve. Advertisers are apparently leaving quickly. Yes, he's cutting the cost base by sacking the vast majority of the workforce, but of course does that workforce serve a purpose? I suspect it will. So that's a big negative, and his ability to sell Tesla's market position and lead above other electric vehicle manufacturers, I think is a big part of the Tesla story. So that's clearly a factor that probably I don't think will have an impact on Tesla in the short term, but as a part of the longer term story for Tesla, will that aura that he carries, will that disappear, and will that have an impact on future sales? Possibly. I think the other factor, of course, is how has he financed this deal for Twitter? We know he sold some Tesla stock. We know that there are some other investors like Sequoia Capital. I think there's speculation there's some Middle East money as well. It does seem a little bit opaque to me. I don't know whether I'm pretty certain he's owns the vast majority of their equity. How much of what he's spent is being provided as loans? What's the security for those loans? Is it simply Twitter stock? Is it potentially even Tesla stock? And I think while these kind of question marks remain, there's always the fear that Tesla could become under attack from short sellers, trying to effectively shake loose a margin call where Elon Musk is forced to apologies. Elon Musk is forced to sell his share or sell some stock to obviously cover the any debts he might have with his Twitter deal. So these are question marks that markets absolutely hate, especially when you're a company, a stock that trades at huge market premiums. Will we get through this period and all this will be proven to be nothing but a distraction? My gut feeling is yes. I think Tesla kind of remains the market leader for a reason. I think their technology is the best. Obviously, the data they have to date, exceeds all of its competitors, and their sales, of course, continue to exceed expectations. And my view is, of course, that consensus analyst expectations for EV take-ups over the next decade will probably prove conservative. So that part of the story, I think, all remains intact. So I think probably my gut feeling is that this is all a good buying opportunity, but it doesn't mean we're not going to see the share price head lower, and this remains a really frustrating distraction if one was a Tesla shareholder. I should say, I should have brought this. This is just one IEA sourced chart showing the expectation of demand for EVs over the next decade or so, under stated policy scenario and a sustainable development scenario. And as you can see, that demand is going to increase dramatically. But as I said, I wouldn't be surprised to see certainly this stated policy scenario ultimately prove very conservative. Anyway, that's it for this week's video. Hope you liked it, and if you did, please click like and subscribe. And otherwise, I'll be back with you next week.